Hi, everybody. Today I'm with Andrew, and we'll talk about real estate. So, Andrew is an entrepreneur. He has numerous years of experience in investing, and he always tries to find what are the best investments he or people can do. So, let's go on the topic real estate. So, let's give the audience a little bit of context on real estate. What is the context, basically, of real estate right now, Andrew?
Yes, so now we are in a situation where I would say real estate is in a bubble, quite extreme bubble. There are people who claim that everything is in a bubble now. I would not say I completely agree with that, but we're certainly close to that. You might have noticed that the price of real estate, at least in Western countries, have been skyrocketing in the recent years and especially months. And I would say that now it reached the point where it's really on the top. It might go a little bit higher in some places, but I think we're in a situation where we are really at the top of the curve. And sometimes.
Okay, let's pause a little bit, if you don't mind. What are the signals that people can see that tell them that the real estate price, being house, flat, land, is actually very high, especially in Western countries right now?
Well, there's several ways you can think of it. One of the quite popular ways is to look at the affordability index. So this gives you an idea how the real estate is priced compared to what people can actually afford, what are the typical salaries. And in a lot of places now, it's basically completely detached from the reality of normal people there. So that means the real estate is unattainable for most normal people in a lot of places now. So that is one possible way to see that it's in a bubble. But we can think of real estate. Sometimes you can think of like, okay, it will keep going up because people need a place to live. But maybe we can discuss several ways that it can collapse. And I see there's signals for those scenarios coming up in near future.
Okay. So why? Let's go a bit on the why. Why is the price of real estate so high right now? How come this happened, basically?
Well, a lot of money supply has been created in recent years by money printing.
Yeah.
And this money needed somewhere to go, and it mostly went into stock market and real estate, and they are both in a bubble. Actually, you can see the same situation in stock market. Is that there? It's maybe nice to make a comparison with the stock market. Because in a stock market, it's a little bit easier to understand why it's in a bubble, because you can see there the price is completely detached from the reality of those companies.
And that you can. Let's try to explain, if you don't mind, let's try to explain also from a practical perspective to the people how this happened. Basically, what's the mechanism from money printing to the price of house being extremely high, or the price of assets on the financial market being very high, because some people have difficulty to connect the dots, and it's good to explain them how does it works.
Well, so you print a lot of money, you increase the money supply, and then people have this money and they are going to put it somewhere. And of course, if you print a lot of money, that increases inflation. But often there is a time delay between the two. And so in the meantime, all this money went mostly into stock market and real estate. And because there was such a demand for people buying houses, that has driven the prices up.
And I'm assuming that the connection between the people investing and the money printing basically is the loan, right? The loan mechanism. Basically, people get access to new money supply from banks, from any financing organization. The access to money is actually at a cost of zero. And in that context,
this is actually the point as well. Is I would like to make a point about basically people using debt to make purchases in real estate. Of course, that's mortgages, and it's becoming different now. But up till very recently, it has been extremely cheap to borrow money, almost zero cost, and that has been artificially created by the governments, trying to keep the interest rates artificially low. And that, of course, doesn't mean just interest rates on your money in your bank account, but it also means that borrowing money is cheap. And this has driven the prices up. And the situation here, this is a very important to mention and understand, is that's actually a big part of why it's in a bubble and why this market is in a big risk, is that there is a lot of money in the market and in the system that simply does not exist. And that might be strange at first as a concept, but it's because a lot of this investment that has driven the prices up, both in real estate and stock market, has been done with borrowed money. And if people will not be able to repay this money, then that means there is money. The prices have been inflated by money that doesn't exist, and it's something that is detached from the reality. Exactly. And a possible way that you can also see it and as a signal, and that's again true for both real estate and stock market, is if you compare the value of real estate or the price of stocks, the market cap of a company in case of stocks, and how that correlates with the interest you're getting out of it. So in case of stocks, dividend; in case of real estate, the rental yields. And quite often, actually nowadays, when you look at the rental yields, even though the rents are going up quite a lot, if you compare the rental yields in most cases to prices of real estate, it's actually quite low.
Yeah, exactly. All right, so let's go into solution advice. So a lot of people are coming up with questions, right? And I'm assuming one of the questions is, should I buy right now or should I not buy in terms of buying a new house? Because I still see people buying on the market right now, although that's far less.
So I think it's important to think of the mindset of the person who's buying, because often people do understand that the dividend or rental yields are low, but the mindset in recent years has been that people don't look at that anymore because they have seen a growth in real estate, in stock market, and they have this idea that this growth will continue forever, which of course at some point there will be a correction. So they don't look at the yields anymore, but instead they look at the idea. They think, like, oh, in a few years I can double my money and then I'm going to sell. That's often the mindset. But if a lot of the money that's been going on is sort of, so to speak, fake money that has been created with borrowed money, you cannot rely on that.
Okay. So is there any signal that people could see and that would tell them that the correction has already started in the real estate markets?
In case of real estate, actually, you can look at the fact that in many places it has slowed down, that there is real estate on the market, and that it's been sitting there for a while. And
okay. So basically, inventory would go up, right? Inventory of house for sale.
Yes, like it's maybe starting to take longer to sell at the asking price because either the price is people are realizing it's overpriced or they don't have money anymore to buy that much. And another signal that there might be a crash is if you see that mortgages are more difficult to get, the interest rates are higher.
So I think we've seen this increase over the past since March, April. The rates 20 years, 30 years plus have been going massively up, right?
Yeah, I mean, it used to be the case in many Western countries. You could get mortgage for almost nothing, and now in many cases it's several percent and going up. And the banks are checking much more people, and they also let you borrow much less money. And with the prices of real estate going up, that means it's becoming more and more impossible to buy something this way.
Okay. So it seems that the correction is actually needed, right, to come back to more healthy foundation, right?
This is actually a possible mechanism for a crash, because if you like if in some cases it's true in many Western countries that the vast majority, sometimes as much as 98% of the real estate market was driven by mortgages. And if they become unavailable, that can easily cause a big crash in the market.
Okay. And so for people who have a mortgage right now, what should they do with it, basically, right? So those people who still need to refund 80, 70, 60% of their home, right?
So actually, having mortgage already, it's not a bad thing. It can be a good thing. It depends on the details of the mortgage. But if you have a fixed rate mortgage for several years to come, that's actually a great protection against inflation, because you will keep paying the same rate as inflation keeps going up. And so actually, that's if you have that right now, that's a very good deal for you and a very bad deal for the bank. And if inflation will continue skyrocketing, which I think it will does for a while to come, then you'll make a lot of money on it. But new mortgages are becoming more and more difficult to get for a good deal.
Okay. And then if you are on variable rate, effectively your repayment will increase based on
Yes.
the official rates. All right. Anything
So
else? Sorry.
Yeah, so I think if you can still get a mortgage for quite a low rate, just make sure it's a fixed rate mortgage. Then it might still not be a bad idea to buy a house, even though it's overpriced, because you could still make money on it. Consider if you believe the inflation, like we do, that the inflation will continue skyrocketing. But otherwise, like I would not really buy a house with cash right now, with how it's overpriced, at least not in Western countries. And I would not, I would certainly not get a mortgage that's not a fixed rate. That's a very bad idea, because then, if there's nothing stopping them from changing the rate to like 30% or something like that, which might be the case in a year or two with the inflation we're seeing.
Yeah, in that case, you can't repay that.
Yeah.
Okay. Great. And for the people who have, let's say, so a bunch of people have one principal house where they live in, and then they have invested in one or two other flats or house that they rent. So for those people, any advice? What should they do?
So I think like what I see is going to happen with the real estate market is that we sometime soon we will start to see I think it will be gradual, but we will see a decline in the real estate market. And
what do you mean by decline?
Well, I would say like collapse, but I don't think it's going to happen immediately. It will be gradual, because there is a lot of inertia in this kind of market, because it's not it's not as liquid as some other investment assets.
Yeah.
But there will be quite a big collapse in the real estate market for most properties, like the kind of stuff that people buy with mortgages. Whereas if you have some very high value real estate, like a penthouse suite in London, 5 minutes walk from the Parliament building, that's going to continue going up, because that's a different type of investors buying it, and they will pay with cash. So it's detached from the mortgage market. But the normal real estate will probably collapse. But at the same time, I think rental prices will continue going up. So I would not not advise buying a new property right now for whatever purpose. But if you have a property already and your idea is to continue renting it, if you can get the kind of like it's a kind of property where you keep getting new people every time, so you can keep increasing the rents, that can actually work out well.
Okay.
Although I have to say, you have to be careful with rental properties in Western countries, because there are some signals that the governments are going to interfere more and more with that kind of investment class.
Interfere? Why? To make sure that it's affordable for the people?
Yes, and also because I think we have seen some signals that there were some cities in Europe, like in Barcelona, and also I think in Berlin, where the local government has kind of threatened confiscation of some rental properties.
Okay.
And it's actually very popular with the population, because there is more and more the mindset, that the people are getting poor because of the bad economy, and that it's the fault of the so-called evil rich. So, if people are struggling, it's very easy for the government to blame it on some evil landlords, even though oftentimes it's not some big company, but some small private owner owning it. And then it can be very popular politically to justify confiscations of those properties. So I think you have to be careful with rental estate properties in Western countries, because there might be a risk of that sometime soon.
Okay, good to know. All right. Anything else for the audience, or we good for this session?
Yeah, I think if you really want to invest in real estate, I would say either wait or look into alternatives in non-Western countries. That's what I would say right now.
Okay.
I would not invest in real estate in Western countries right now.
Good advice. Thank you, Andrew. That was great.
You're welcome.
And I hope this is useful for the audience. All right. Bye.
Thank you.
Thank you.
Bye.